Hi there everyone, welcome back to the YouTube channel. So this video is going to be on top-down analysis. We are going to go over what it is, how we use it, and then by the end of the video hopefully you will be confident enough to potentially find trades like this for an increased risk to reward. So it will work with multiple different strategies. It's mainly just for entry and exit points. So it just allows you to potentially increase the size of your targets and then also not look to get into positions when price is trading in and around certain points. So what we'll do to start with is go over what it is, and then obviously we will break it down step by step so you are better versed on how to use it. So let's go over what it is for starters. So top-down analysis involves looking at multiple different time frames of any given market. So it could be the currencies, the commodities, the stocks, whatever it is and whatever market you are trading, it is going to be beneficial to potentially implement this within your trading. So it would usually involve starting on a higher time frame to identify upcoming key levels or trends. So it can be used when you try and find a bias for any given market. So many people are profitable focusing on one time frame. So this is not me saying that you should be only doing top-down analysis. I know many traders who only trade one time frame and it works for them. So it's just something where you might want to look at just to see for the future where price is coming up to, and it might just increase your risk to reward slightly. And if you can do that by looking at this video, then that is the main thing. So why would we potentially use top-down analysis? So a lot of people will mainly use top-down analysis for the trend. So they will analyze multiple different time frames and then look and observe at which way they're going. So it could be, is the weekly going up? Is the daily going up? Is the 4 hour going up? If all time frames are going up, then there's more chance that the trend is going to continue that way rather than trying to find the reversal, okay? So it just basically allows you to build confluence and reasoning to potentially enter the market in a certain direction, but then also allows you to avoid going against the trend and then obviously being against the majority of the market. Following on from this, you've also got entry and exit points within the market. So by identifying upcoming levels within the market, you're going to see where price might be going next, where price is now, and then it will allow you to potentially stop taking trades when the price is in and around areas, which is going to do the complete opposite of what you want it to do. So noise avoidance as well. So I've found myself, if you look at, let's say, the weekly time frame to start with, there's a lot less noise on there. So by avoiding the noise and the price fluctuations in the lower time frames, you're actually able to analyze the market from a more relaxed standpoint, knowing that the levels are going to be way bigger, and obviously the market structure is way cleaner as well. And then just finally, full scope analysis. So by looking at multiple time frames, you're allowing yourself to understand the market with a bigger view. So this might even allow you to get more from the market when it comes to risk to reward, as I've mentioned. So if you see price heading, for example, towards a weekly low, then you might want to target that instead of obviously targeting before then, and just being a bit more patient. And by being patient, you might get a bit more money out of the trade. So we're going to go over in this next example a step-by-step breakdown of how you could use the weekly time frame to confirm bias for the lower time frames, and then we're also going to break down a gold chart from start to finish and then look to find to enter a position. So this is some analysis I did last week for the members in the group, and it did obviously play out. So if you are interested in the groups, then the link is in the bio for you. But what we identified was that the dollar was pushing down and then broke, obviously, these two lows here. Now, usually, a break retest or a deeper pullback would potentially work in this example. But what we saw is that if you look, the next weekly candle closed straight back in below the low. What does that mean? That means that this is basically a wick. So where the 2 wicks were here, price broke down and then broke straight back in. Therefore, you know that this was a fake out and it just caught people out within the market. So you now know, although the market is pushing down, this could potentially be a liquidity grab for then price to push back up. So following that, we then saw that price was shooting up towards this weekly high. So instead of trying to catch price stopping in between that, we can just identify that maybe price is just going to continue up. Because if you look, from this point now to this weekly high, is there anything in the market which is there to stop price? If you look, there is nothing mid-structure, so you know that there's a high chance that it's going to continue up to the high. Once price got up to the high, we basically said we were expecting dollar weakness from this area due to obviously the market pulling back, which it needs to do. So if you break that down step by step from the start, you identify that price may be starting to turn due to the fake out. Price is then heading up towards the weekly high, which is going to be the first target for the dollar, and then following that, price began to pull back. So just from looking at the weekly time frame, it's a lot cleaner. We managed to break it down, and then now what we are going to do is go into some chart examples where what we will see is how from start to finish you can look at the weekly time frame and then go down to the lowers just for entry purposes. On the screen now we have gold. So this is actually an example that I provided to the free group, so the link to that will be in the bio. I basically identified a few areas on gold that I may have been interested in, and then following that I used them. So when we're looking at this weekly chart here, originally at the top I noticed that obviously price had made a high here. So what does this mean? This means that on face value I do not want to be buying in and around this high, because the chance of price pulling back is going to be greater than it continuing. As well, I identified this low within the market. If we also go further left, you can see that we had multiple reactions at this level. So from this point here, you know you're expecting strength potentially from this level, and you're expecting weakness if price reaches this level. However, what we can also do is look at the market and also the structure and see what we're looking at. So as it stood, price had been moving up on gold, and then obviously it did start to slow down. Then what happened is that we had a higher low created here, followed by a higher high. What happened following that was that price actually broke the higher low and potentially signaled to us that the market was about to turn bearish, and therefore we could look for some weakness on gold and also potentially some sell positions. So at this moment in time, I did actually say to the group that I was expecting something like this to happen. So if we get rid of this, I was expecting, due to the market structure, price had made almost like a double top as well. So I was expecting price to push down to this weekly level. So to start with, my bias on the weekly was down, which means we are indicating sells. Now, at this point now, what you can do is go down to, let's say, the daily, and just as well identify what price is doing on the daily. So as it stood right now, if we're looking at this candle, is that price was trading in and around the break and retest of this low, and I am still looking to target in and around this level here. So just because we are now on the daily, we did have the weekly low, but maybe what I want to do is pay attention to here, because this is also a structure point on the daily. So right now, my bias is down on the weekly. I've got a break and retest of a low on the daily. So what I can look to do now, go into the 4 hour and see if there's any more structure that I can work with. So as it stands right now, I know I'm trading in and around the low. The next point of market structure is this high here. So as long as price is trading below this level, it's okay, I'm interested. So this could potentially be somewhere for stop loss placement. Now, what we want to do from this point now is identify what your entry time frame is. Depending on your strategy, it's going to be different from person to person. For this example, I'm going to go on the hour and see, based from this, if there's anything I can do. So yes, we could look at the 15, the 5, you may get some better risk to reward, but just from looking at a structure standpoint, I'm happy for a stop loss to be below there. So that's obviously a gap within the market. No matter what your entry signal is, so it could be something like an engulfing candle, so something like that. Or you could wait for a second entry like this, where you are simply just waiting for price action to line up. You could then put your stop loss above the structure, so you've got a 1500 pip target there, 1500 pip stop loss there, and nearly a 4,000 or 400 pip target. So you're looking at about 2.61 risk to reward in this example here. And then let's play it out and see what happens. Price is continuing to kind of move. As long as your bias stays the same regarding shorts, yes, you are in this trade for potentially quite some time. But there you go, your target would have been hit. So what we did initially, let's just go through the points once again. We are on the weekly time frame. We've identified that market structure is bearish. So our bias is now to the downside. By going on the daily, we identified price was break and retesting a low on the way down towards where we are interested in the market. We've gone to the 4 hour and identify that there is a lower high here where would be good for stop loss placement. Some people, you may want to put a tighter stop loss based on price action, or you might want to be conservative and you're happy with a 2.5 risk to reward, okay? And then by going into the 60 minute, we just waited for some bearish confirmation and price action. We got that, stayed in the trade, and then price has done that. And as of right now, price is actually, if we look, trading in and around this low now. So if we're looking at this market, we know we are no longer looking for sells. We are now going to be buy bias. If price was to break here, then yes, the next stop is going to be this structure point here. But as long as price manages to maintain this low, we may even see price go back up here, or we may see price pull back. So where price necessarily goes, it doesn't matter too much, because at the end of the day, we are identifying that the market did have a shift to the downside here, so it was easier to target the low. If we are still bearish on this market, then obviously we can look to still take a long from the low, because this is a discounted price within the market. So let's have a look at something we could maybe do. So we know that price is trading in and around here. You could wait for a structure shift, meaning you could wait for price to maybe break above these 4 hour lower highs, wait for the retest like so, and then basically once again go into, let's say, the 60 minute, and once you get some confirmation of that structure shift, you could then look to obviously get in, stop loss below structure always, and then continue to target wherever you want to target. It could be the high if you are looking for price to stay bearish, or you may want to target a fixed, 2 to 1, 1 to 1, whatever you may want to do. So that is basically how we can do top-down analysis with market structure to then allow you to extend your targets when it comes to picking positions, and when also then where to enter and also get out. So if this video has helped you guys, please leave a like, leave a comment if you've got any questions. But if not, I will see you in the group.